India shines brightly on the global economic stage, capturing the attention of investors worldwide. Currently, India is amongst the top 5 economies of the world and is expected to be the largest country by population. India beckons investors with its strong economic growth rate of over 7% and its future prospects. In the post-pandemic period, India has been the fastest-growing large economy and is projected to become the world's 3rd largest economy by 2030. For the Indian diaspora, comprising both non-resident Indians and the overseas citizens of India, the call is even stronger, driven by both emotional and financial factors. Are you an NRI or OCI keen on investing in the equity and bonds market of India? Would you want to make your investments on a repatriable basis, that is, be able to take your investment and gains back to your overseas country? Then, you need to know about the Portfolio Investment Scheme. This is a facility that allows investments in stocks and convertible debentures of companies registered with a recognized stock exchange in India. The scheme has been devised by the Reserve Bank of India to enable these transactions by routing it through their account with a designated bank branch. Let's now understand the details of the Portfolio Investment Scheme. NRIs can invest their earnings from overseas in Indian equities and bonds of companies listed on a recognized stock exchange in India, such as BSE or NSE. Investments on a repatriable basis are also permitted in government-dated securities, treasury bills, units of domestic mutual funds, bonds issued by PSUs, and shares in public sector enterprises which are being disinvested by government. So, what is the investment process? How can an NRI invest in India's stock market and be able to repatriate back the investment? The funds which are invested on a repatriable basis have to be invested through an NRE Portfolio Investment Scheme account, which is maintained with a designated bank in India. This account is linked to their trading account with a registered stockbroker. So, an NRI needs to have an NRE savings account, NRE Portfolio Investment Scheme account, trading account, and DMOT account to start investments in the Portfolio Investment Scheme. All purchase and sale transactions have to be done only through the NRE Portfolio Investment Scheme account. Investment funds can be sent to the NRE account through inward remittances through normal banking channels. The invested funds and the returns can be repatriated in compliance with RBI regulations. Investments made through NRE Portfolio Investment Scheme accounts are generally fully repatriable. While NRIs can have multiple bank accounts, an NRI can maintain only a single NRE Portfolio Investment Scheme account and must designate a single bank for their investment transactions. If due to any reason, an NRI wishes to transfer the Portfolio Investment Scheme account to another bank, the customer has to obtain a no objection confirmation letter and holding details from the first bank and submit the same to the new designated bank. What is the regulatory framework for a Portfolio Investment Scheme account? The Securities and Exchange Board of India regulates the investment process and ensures compliance with Indian securities laws. SEBI, the capital market regulator, sets comprehensive rules for stock market investments. It is dedicated to safeguarding investor interests and ensuring fair practices. The Reserve Bank of India, RBI, oversees the foreign exchange regulations and ensures compliance with the Foreign Exchange Management Act, FEMA. Are there investment limits on how much an NRI can invest? If yes, how much is the limit? Yes. There is a limit on the value of particular shares that can be owned by an NRI and is monitored by RBI on a daily basis. An NRI can invest only up to 5% of the total paid-up capital of a company listed in a recognized stock exchange in India. Similarly, NRIs can invest only up to 5% of the paid-up value of a series of debentures. The total investments by all NRIs in the paid-up capital, or in each series of debentures, is restricted to 10%. Once the level of NRI investments near the threshold limit, NRIs cannot invest in the stocks of that company. Are the earnings from the stock investments through the portfolio investment scheme subject to income tax in India? Income earned from investments in India is subject to Indian tax laws. Tax deduction at source is applicable on dividends, interest, and capital gains. NRIs are required to pay taxes on their earnings. However, there are provisions for claiming benefits under the DTAA tax treaties, if applicable. If excess tax has been paid, NRIs can also claim a refund while filing their IT returns. Are there any restrictions in the portfolio investment scheme? If yes, what are these restrictions? Yes, there are a few restrictions. An NRI can open and maintain only a single portfolio investment scheme account, and all purchase and sale transactions have to be done only through this account. NRIs cannot invest in any company that is engaged in the business of chit funds or needy companies, agricultural or plantation activities, real estate business related to agricultural or farmland, lottery business, gambling and betting including casinos, construction of farmhouses, etc. Speculative transactions are also not allowed in the NRE portfolio investment scheme. All transactions of sales and purchase must be delivery-based. NRIs are not allowed to engage in intraday trading or short selling. NRIs cannot open a portfolio investment scheme as a joint account. Borrowed funds or loan taken in India cannot be used to make investments under the portfolio investment scheme. An NRE portfolio investment scheme account cannot be maintained if an NRI's status changes to a resident Indian status. In such cases, the returning NRI will have to inform the details to the bank branch and set up a new resident Demat account. The portfolio investment scheme provides an opportunity to non-resident Indians for investments in India's stock and bond market on a repatriable basis. NRIs can also invest in stocks on a non-repatriation basis through a non-portfolio investment scheme account with funds from either NRE account or NRO account. We hope you've learnt about the portfolio investment scheme option and will benefit from the same. So, start your NRE portfolio investment scheme account now and benefit from India's growth prospects. We'd like to bring to you more such informative videos. Please like and share this video to your friends and also subscribe to our channel. Thank you.